In this video, I tested a strategy with an 80% win rate created by Magic Indicator Strategies. We'll be testing it 100 times using Euro USD on the 5-minute time frame to see if it actually is legit. Before we start, welcome to TradeFluence. On this channel, we aim to validate as many strategies as possible for you guys to use. So this strategy consists of two indicators. First, you're going to need to load up TradingView and then head on over to the Indicators tab and type in Machine Learning and Optimization by Zieleman. And for the second indicator we're going to need is the momentum-based zigzag by Peter O. Now we need to make some adjustments to both these indicators, so double click on the zigzag, go to style and uncheck zigzag. Now we need to go and double click on the machine learning and optimization, go to inputs and change the amount of historical data to all data and change the optimization goal to combined, then activate machine learning and change the moving average SMA to EMA and change the moving average SMA to Hull. Once done, we're going to need to uncheck all the bottom three boxes. And we're set up. Now let's go break down the entry criteria when looking for longs. Okay, so when looking for longs, these three things need to be met. First, you need a new long signal printed. Secondly, the slow EMA needs to be below the whole MA. And finally, the candles must close in between both the moving averages. As you can see here, we had loads of long signals printed, but they were all outside the Hull MA, which means they're all invalid trades. So once all the confirmations have been met, we can take an instant execution with the stop loss below the most recent swing low. And for our trade management, we're going to close the trades when price closes back below the Hull MA. Okay, so price closed back below the Hull MA and we're going to close out for 3.85% profit. Now let's go and break down the sell criteria. Okay, so when looking for sells, the exact opposite is true. First, you need a new sell signal printed, followed by the Hull MA below the slow EMA, with price closing in between both the moving averages. Once all three confirmations have been met, we can take the instant execution with the stop loss above the swing high, and we'll be managing the trade once the price closes back above the Hull MA. Okay, so in this scenario, we're going to take a small loss. As you can see, price closed back above the Hull MA, and now we're going to close out for a small loss. So the strategy seems simple enough. I'm going to go back test this 100 times. I'm going to come back to you with the results. Okay, so the results are in. I know I said they're going to take 100 trades, but we only found 50 trades in the span of 6 months. So I cut it short as we had a reasonable set of data. But we took 50 trades, 53 won and 17 lost, with a win rate of 66%, and the final net profit was 29.87% in them 6 months. So the strategy is very good. One thing I would note is that you should have a fixed return, because a lot of times price went into profit and came all the way back down after being 4% up, which would be pretty frustrating in a live market condition. But like always, thank you guys for watching. Until next time.